My good friend Lou Basenese is in the house.
Happy
Lou,
New Year, my friend.
It's a new year. Yeah, Happy New Year to you. Is it time for new investments, or do you keep betting on what's working, i.e. big tech?
Yeah, listen, new year, new you, new mayor. Keep your old investments that are working, though. I know it's not popular to say that, but just because we flipped the calendar doesn't mean what was working last year isn't going to keep working. So AI, I think he makes some changes there. Microsoft CEO Satya Nadella saying this last year was a year of discovery. This is a year of diffusion for AI. What does that mean? We'll move from the suppliers, the chip makers, to the solution providers. So I think you're going to see opportunities there. Small caps, they outperformed large caps the last 6 months of the year, rising about 15% versus 10% for the S&P 500. I think that trend keeps playing out. Biotech's back in a big way. Big Pharma's got to replace about $180 billion in revenue between the next 2 to 3 years, so they're going to make acquisitions. So I think that's ripe for opportunity again as we turn the calendar to 2026.
Yeah, very quickly, Lou. Tax breaks, more money in people's pockets. Gas prices nice and low. It seems to me that the grind higher doesn't seem to slow down. I think it continues.
Absolutely. If you look at estimates for S&P 500 earnings last year, the analysts were woefully wrong. They were too conservative. They expected about 5 to 6%, and we got about 12%. This year, they anticipate 15% growth. I think we do better than that. So 15% growth for the S&P 500 should lead to another double-digit rally for the index.
Fantastic. Smiles all around. All right, Lou, stay right there. Glad to have you for the hour. Great stuff.
Let's take one market where Tesla sells, Spain. If you look at fully electric and hybrid sales there, up 95% last year. Not for Tesla. In fact, in December, Tesla's Spain sales fell by 44%. Again, the numbers are bad. Investors don't seem to care. The stock's at 457.
Yeah,
what's the story there, Lou?
It's a head scratcher to me too. I think Lauren's spot on that investors don't care about the fundamentals. Webbush's Dan Ives says that fundamentals don't matter for companies like Tesla. I love Dan, but I have to disagree with him. Fundamentals will eventually matter, and this is the second year in a row annual sales of EVs for Tesla have fallen. That's not a good sign, no matter how much hope you put in the future of robots and mobility. So, not a buyer.
Very good. Not a buyer. All right, let's move on to Wayfair. I believe that stock is up this morning. What's going on there?
Up 7%.
It's up 7%.
Yeah, the White House delayed by 1 year tariff increases on upholstered furniture, kitchen cabinets, and vanities. That means existing duties remain in place. So upholstered furniture, it stays at 25%. Kitchen cabinets and vanities also stay at 25%, rather than doubling to 50%. So Mizuho came out today. They're reiterating their outperform rating. They say for Wayfair, this is amazing. It gives the company breathing room and says they've been able to absorb costs while taking market share at the same time. If you look at Wayfair for last year, I didn't realize this, the stock more than doubled. It was up 128%. Then you take a name like RH, which is up about 8% this morning. It fell 54% last year. So for names like RH and Home Depot, this is good news.
Every time I think of Wayfair, Lou, I think of Kelly Clarkson, so I guess the advertising works.
Every time I think of Wayfair, I think of cheap furniture that I'm bound to return or get frustrated putting
and then
together.
Get for free. You return it and they say keep it.
Look, I've been a long-time bearish skeptic on this. The stock, to Lauren's point, though, has really rallied last year off the April lows. The tariff tantrum is up more than 200%. It's a momentum play for sure on retail spending. You remove some uncertainty with tariffs. But growing revenue at 8% and trading at a 35 times valuation is a little bit pricey for me, even for that momentum play.
Lou, you brought some stock picks with you today. Why do you like Tempus AI?
Yeah, I got to move from dogging stocks like Tesla and Wayfair to ones I actually like. Tempus AI really uses AI in medicine to lead to better outcomes for both patients and then for drug discovery companies. So it's had a business, genetic testing forever, that collects a lot of data. They're now using AI to leverage that data to discover better treatment options for patients, for doctors to provide, as well as new drugs to develop. Revenue's up over 84% in the last year. They're raising guidance, doing all the right things you want to see with a fundamentally strong stock and business underneath it.
Very good. How about the next one you bought us, Viking Therapeutics?
Yeah, this is a name I predict will get acquired this year because it's the next leader in the obesity GLP-1 race. They have a drug, both oral and subcutaneous, that is getting very favorable results, but they also have in their pipeline a drug that treats fatty liver disease, which there's only one other company out there, Madrigal, which we talked about on the show last year, that has an approval there. So big open sky markets for them to attack. I think Eli Lilly or maybe Novo Nordisk, which is struggling on a valuation front, the originator of this GLP-1 trend, makes an acquisition of Viking later this year.
Of course, anyone that has the Viking in the name is going to attack whatever. Interesting stuff, Lou. Appreciate it.
According to reports, if you go into Saks, there's not much inventory because a lot of the brands, a lot of the vendors weren't getting paid. So they didn't have the best stuff in the store.
That's not good. Thank you, Lauren. Let's get Lou back in on this. Lou, do you think Saks can recover?
Yeah, I think they can if you get rid of the debt. I mean, I don't believe this is a recession signal and a sign that the consumer is slowing down spending. It's just a symptom of them having too much debt on their balance sheet. They tried. These are icons and the pioneers of luxury retail. That market suffered, understandably, after the tariff sell-off, and here you have too much debt and you can't pay it. So I think it's more financial engineering than retail demand.